Today I'm going to talk to you about why we have accounting. First of all, we talk about the measure of success. How much profit have we made? How profitable is the business? Secondly, the measure of wealth of assets, liabilities and owner's equity. So we want to know how many assets we've got, what we owe in terms of liabilities and what the owners own themselves. And thirdly, control over cash flow. We need to keep track of our cash flow to manage our payment to our suppliers, our lenders and so forth. Now the most important thing, the reason why we have accounting, is we need to detail where the money has come from and gone to. That's pretty obvious. So we need to account for every money that comes in to the business and goes out, and what it's spent on, and also needs to be verifiable. It forms the basis of future decisions. So we want to find out whether we can buy a piece of capital equipment in the future, whether we can reduce our costs in the future, whether we can increase our sales in the future, whether we can expand in the future. The most obvious thing is that we need to have accountability for owners. Now owners, in terms of sole traders, partnerships or shareholders, they need to be accountable to their owners and the other users of accounting to make sure that what they say they have done, or what the financial statements say that has occurred, has actually occurred. Obviously the other thing, it illustrates the financial position of performance to interested parties and users of accounting information. I'll come back to that in a minute. Here it is. Users of accounting information. The first one is management, obviously internal. The managers need to know what's going on, the control of the costs, setting of revenue targets and so forth. Then we have external people to the business. Owners, the present owners, because sometimes the owners are not necessarily the managers, and also we're talking about future investors into the business or buyers of the business. Lenders of capital, quite often people or businesses need to borrow money from banks and other lenders. They need to know, first of all, have they got the ability to repay by looking at their profit and loss statement, and have they got enough collateral or security. They look at the assets of the balance sheet for that. Quite often creditors want to know the ability for the business to repay debts before they extend credit from supplying them goods and services. We also have trade unions who represent workers who want to find out whether there's enough money for them to get a pay increase. And lastly, the government. The government needs to obviously tax the businesses in various ways, and the Australian Bureau of Statistics want to keep track of our statistics as a nation.